Gasoline is pointing to much lower oil prices. The demand destruction in gasoline right now, because of the pricing, is so high. I think gasoline demand was around the Labor Day holiday, hadn't been this low in 25 years, something like that. Big demand destruction in all kinds of categories, including staples. Now, the Procter & Gamble's and staples companies, they took full advantage of supply chain crisis and jacked prices up. Guess what? Their volumes are falling. That is not a good recipe for a manufacturing company. You want to keep your manufacturing plants running full time. And now they're seeing a pullback in unit volume. We're seeing in the S&P 500, about a third of the S&P 500, a third of the companies are showing falling revenues.
The first time I hashtag get off zero was 2018 and Bitcoin was $6,700. But, and to your point, it was even before that back in 14, 15, where, I went to my clients, institutional clients for the first time, first quarter of 14. And they're like, you're an idiot. Don't talk about that. That's just stupid. And, that was painful. And, by 15, we got a couple people to listen to us, not very many, but a few. And really 16, 17, they stopped calling me stupid and at least just said, oh, bless your heart, So the good Southern, you're stupid. But anyway, here we are. And they're coming. Everybody's coming. Literally everybody.
Rolling recession. Housing, by some measure. Sales, down 40%. That's a recession there. Auto sales, 15 million units. That's recessionary. Falling prices as units fall, that sounds recessionary. And that's happening in staples. Home Depot today, sure, it was one of the biggest beneficiaries, but it's been 2 to 3 years now, and it's still saying minus 3% same-store sales growth. That's both price and profits, and deeper negative here in the US, minus 3.8. So I'm looking at statistics and I'm listening to earnings calls. When I listen to earnings calls, and I listen not just to ours, but to other more cyclical companies, just to get a sense of the economy. You listen to them and you'd think we're in a recession. Now, it depends on the area. We're in today's CPI, you saw auto prices coming down, you saw airline prices coming down, so you saw education prices coming down, oil and energy transportation we knew about. Rents, the pop last month reversed, didn't go negative, but in the real world, we're hearing about serious rent declines or serious discounts like 6 months free or 1 month or 1 year free. So I think it's all around us. The Fed is paying attention to lagging indicators. One is the CPI. It's gone from 9 to now roughly 3. We think it's going to turn negative before all is said and done. The other one is employment. Now, what the heck is going on in employment if what I just told you is true?
Right.
We know how many companies had such trouble finding anyone as we were coming out of COVID. They're reluctant to fire people even though their margins are starting to fall, so they don't want to go through that again.
BlackRock ETF is going to get approved. Hundreds, plural, hundreds of billions of dollars are going to go into Bitcoin, and that's going to trickle down through the ecosystem, and the digital age will be here. And the thing about it is, we've been talking about this, right? 2024 is the 14-year cycle. And it's only 6 weeks away. I mean, we are 6 weeks away from the beginning of this powerful 14-year tech cycle with, blockchain at the core. And I'm super psyched. I said at this conference in New York, and it's like making the rounds on Twitter, I said, look, there's actually a chance. They quoted me as saying it will definitely happen. I said, there's actually a chance that Bitcoin could become the base settlement layer for all global assets. Right? And everybody's like, well, and then there's other people, of course. That's what we've been saying all along. Like, well, maybe not, but okay. But here's the thing. People who are, ETH heads are like, no, there's more transactions on ETH. I'm like, that's not what I said. I said the ultimate settlement layer for the highest quality assets likely will be the highest quality chain. How do you judge quality? I don't know. Uptime, lack of hacks, security. Okay. So you can make a case for both, but at the end of the day, what I see happening is the highest value digital assets are migrating toward Bitcoin. That's interesting. And it doesn't mean you can't have, to your point, other systems that do other things and even have monetary use cases, but they won't be money. Like if you believe, as I do, that Bitcoin has won the war for digital gold, right? That it is a better form of gold. It's equally scarce and more divisible and more portable. And therefore it will replace gold as that base layer. Then we can abstract all we want on top of it. And we said that, that inflation that everybody was worried about actually wasn't inflation. My view has always been, it's never been inflation. It's never been excess demand for limited supply of goods. It was always currency devaluation, which caused oil prices to rise, and the lockdown, horrible policy decisions, which messed up the supply chain, which made used car prices go up, for a short period of time. All of that is now gone the other way, and we're back to where we were. And yet the market reacts to it like it's some massive amount of good news. And, I think we're up 10% plus in November here in equity markets. Now, I'll explain why that is. And again, we talked about this a few weeks ago. It isn't inflation. It isn't anything other than the November effect, which used to be called the January effect. And it's the fact that, people sell all their bad stuff in October. When I say people, meaning the mutual funds, they have to sell before October 31st for their fiscal year. And then they have to wait 30 days to buy it back. So that's been moving, or it used to be, right before October 31st. Then it was like October 15th. Then it was like the first couple weeks of October. And so what was happening is there was this rally, then 30 days later in first part of November. And everybody said, oh, it's the Santa Claus rally. It's like, no, it's not the Santa Claus rally. It has nothing to do with Santa Claus. Santa Claus is a mythical person. But this has to do with real people buying real stocks 30 days after they sell them for tax losses. And that's what's happening, I think, in the markets. And there were a lot of people who were short, who got caught offsides, just like the Bitcoin rally. People were short and they got caught offsides. And so we got this big rally. And then they misinterpret this. We're at 3%. And Professor Plum, Mike Green was on a clip I saw on Twitter. It was kind of funny. He's like, people do realize that 3% means prices are still rising, right? They're rising less than they were the month before and 6 months before, but they're still rising, right? I mean, people do understand that. I just don't like to be on the other side of investment legends, right? But I just vehemently disagree with this whole idea that inflation's going to go to high single digits. Look, I think inflation is driven by working age population growth, and working age population growth stinks. It's headed to sub 1%. The boomers keep aging every day. 10,000 more of us turn 65. I still got a ways to go, but it's going to happen. And that I just think we're going to be much more in a deflationary environment than an inflationary environment. And look, the 2% number, it's just the theft target. There's no normal reason for quote unquote prices to rise just because. Prices should rise when demand exceeds supply. That's economics 101. But this idea that by increasing the money supply and therefore devaluing the currency, because that's all this inflation target really is. It's a devaluation of currency target. And the big spike and the expectations lag the reality. So these expectations weren't before the Fed printed all the money. It was after the Fed printed all the money. And then magically people were shocked, I tell you, that the prices of things and the quote unquote value of things went up.